Okay, I actually plan to make a video on the after next week because I wanted to see how the tariffs thingy plays out, but it happened so fast that I just have to make the video this week instead. I mean, if you scour around the internet, you can see influencers already posted about markets crash, instilling fear, and what you're supposed to do. So I figured that just like what I'm interested in, I wanna make a video to explain what is going on right now, especially with this tariff policy from Trump being clear right now. Alright, so I mean, not only he pulled out a huge cupboard with tariffs on it, other countries actually had started to respond as well, all within this week. Alright, so I mean, just listen to this. Canada and Mexico made the headlines first, with Canada actually exploring options on how to negotiate his tariffs imposed on Canada, while Mexico's president had stated on April 3rd that they won't even retaliate at all. Well, at least not yet. So Mexico is absorbing the 25% hit for now. Then UK's Starmer and Vietnam's PM requested talks with Trump to mitigate tariffs. Singapore would also like to communicate on tariff, considering we are hit by the 10% baseline. Cambodia, on the other hand, actually cut tariffs on US agricultural imports by 5% on April 2nd, hoping that will help it. Israel had eliminated its 5% tariffs on US goods on April 1st, citing trade partnership. Argentina's Milei had requested talks on April 5th, while India had slashed tariffs by 10% on US goods on April 4th to counter the 10% baseline. China, on the other hand, imposed a 34% tariffs on US exports like soybeans and autos, effective April 4th, in response to Trump's 54% on Chinese goods. I mean, I'm not surprised at this point, right? On top of that, TikTok deal failed, not surprised too, and China's presidency actually decided to drop it because of the tariff. Very good excuse here. Then we have Germany that started to seriously consider whether to withdraw their gold from the US if this becomes true. It may even have a serious effect and even a chain effect. If you haven't, you can watch my previous video where I actually talk about and explains about gold and how it can be bad if this situation happened. Alright, next, there is Jerome Powell's speech on April 4th, which, spoilers alert, didn't help much. Then there is the BRICS angle. I think everybody kind of forget about this. And lastly, the market. Yeah, that's a lot. But of course, as usual, I will make sense all of it. And on top of that, I will also touch on the Singapore REITs, known as S-REITs, as well as banks. I know I don't usually talk about Singapore stuff, but in the past week, the movement of the market kind of caught my eyes a little bit, caught my attention a little bit. So that's why I wanted to talk about it. So yeah, get comfy, grab your drinks. I'm Daddy, and this is That Money Compass. So previously, I made this video about what was actually happening post PCE data report, and we touched on pre-tariff moment and how it affected the markets at that point. If you haven't watched it, you can go and watch it first because it is kind of like a continuation at this point. So yeah, since then, things have definitely unfolded more. Markets are also behaving differently now, and it all started with this. So basically, there are 10% base tariffs imposed on almost all the countries globally, and then selected countries will have more tariffs imposed on them, like China. Specifically though, people are looking at this. The 10% baseline, 54% on China, 24% on Japan, 25% on South Korea, and 25% on Canada and Mexico. That's it. A clear tariff policy was erected by Trump, and the whole world went crazy pretty much. But most importantly is this. Although not surprising, but China imposed another 34% on the US I mean, the act itself is not surprising. It is the amount that people are probably unsure about and probably didn't expect. I mean, come on, China's Xi definitely won't back down, right? He had already mentioned publicly multiple times how they will fight back on these tariffs since back then. But this spells a potential issue. An issue in which a bigger trade war between US and China happening. Knowing Trump that he won't back down easily, him not wanting to admit losing, this is potential where Trump may impose even more tariff on China, and China on the other hand may retaliate more. This spooks investors pretty much. On top of that, Jerome Powell's speech on April 4th definitely didn't help as well. At this point, it is clear that Trump and Powell just butt head. Trump wants rate cut. Powell doesn't give it. In fact, in his speech, Powell basically said that there is a potential inflation happening due to all the tariffs happening, and it is because of the tariff that this may be happening. Knowing that the Fed wants to ensure inflation remains controlled and employment rate is stable, this says a lot. It seems like people are fearing that there may be a rate hike instead, which means there is a focus shift from a possible rate cut. This is not good. And this also is further proven by the fact that recent employment data showed an increase in employment, but the market didn't even give any chance. It was only down, and it was down really fast. This clearly shows the sentiment. Alright, and we are going to talk about it more later. Okay. Additionally, Germany considers withdrawing 1,200 tons worth of gold from US Federal Reserve vault following new tariffs. Is this crazy or what? Will this cause a chain effect? Will it cause a gold run? This may signal more issue here. If it's not now, it will be in the future, right? If that happens, it may actually cause a chain effect, and the US may face gold crisis here like in the past. If you haven't watched, you can watch it in this video over here where I actually talk about it. Gold price dipped, but it is still sideways at this point. I will touch on how this may go about later when I talk about my theory, but this is potentially worth noting because it shows how countries are getting more doubtful about the US fiat at this point. There's no reason not to, right? If inflation does happen, USD value could be severely affected. And Germany is not the only country that has gold with the US. Alright? So meanwhile, in Russia is not asking the US for sanctions relief because all of this pretty much shows how the US is getting more undependable, and all of this just plays into the BRICS favor here. So far, we know Russia is not imposed on any additional tariff, but they still have the sanctions, right? China has retaliated. The other countries though, that are part of this, the way I see it is that they may still try to negotiate considering they are not as strong as Russia or China. But who knows? The whole purpose of BRICS is that they can slowly shift out from the dependency on the US dollar here, right? Globalization means trading, and trading now can be done in other currencies and even in crypto. And they can still do diversification, and this may affect the US itself. And that, folks, is what happened and is happening. Now that we have got that out, let's move on to the market. Alright, the market sentiment and the investors like you and me. So what is going on? Markets crashed. That's clear. The main reason is the potential disruption on the global trade. This is because with tariffs imposed globally, supply chain will be affected, and considering a country needs another country's resources and production capability, this is a no-no. With imports and exports affected, ultimately it is the companies, businesses that are getting affected, which means their profit margins will be affected. It is as simple as that. Investors don't like companies that can't produce revenue and profits, so they sell. Considering all the big money comes from institutions like hedge funds who care most about their P&Ls. Yeah, I mean, it's blood-bathed out there at this point in the markets, right? That explains the crash on the market. S&P 500, DJI, Nasdaq, all are down pretty much. You will also hear retail investors and the normies cry about their portfolio. Those that leverage, yeah, pretty much say goodbye at this point. Just look at this way. Employment data was good. TikTok deal failed, but none affected the market sentiment, which is evident from the price action. It was consistently down. All right. It's very clear that the tariff is the main driver here. Fear is there. So naturally, the question is this. So what do you do now as investor, right? So let's take a look at gold, bond, and the dollar. In my previous video, I had shown how gold reached its peak while bond didn't move much and the dollar was down. Now let's see this. This is a chart that I kind of plotted, and as you can see, the gold dipped from its peak. The dollar slowly increased while the 10-year yield is going down. But one thing is clear here. When the announcement was made, all three were down at first. Alright, before each of them make their own move. And here's why. When the announcement was made, it was made clear that the tariff is legit and the tariff rates were cray-cray. This is negative news. So when such chaos is happening and a big risk of sign is lit up, investors would like to look for alternatives here where during such negative situation is happening. Gold is an investment. It doesn't provide cash flow. Yes, it preserves value, but it is still an investment. The dip was a profit taking because for funds who had invested around 2.9k or 3k mark, they would have locked probably about 5% profit there. So this helps their portfolio result. Alright, hence you see a dip there. But there is no significant sell off. So the significant sell off happened in the market. Right, about $5 trillion were drained from the market. And knowing the institutions, this money needs to go somewhere. And this somewhere needs to produce something. Gold is out for now because it just preserves. It is an investment, but it had recently reached its peak. People need cash if the worst happened, which is inflation rises up. So with the stock market being out as well, a bond is the answer. 4% is still a decent yield, as they can still get this cash flow, right? That's when we started seeing the rotation. We can see the bond yield started going down while the gold saw just a slight uptick. All right, what about the dollar then? When you look at the chart, it is clear that the dollar has started to tick up as well. This is because more people are buying dollars to turn into the treasury, okay? Hence, yield is down for the treasury. I suspect that this will go on for a while, which means yield may actually continue to go down while gold is pretty much sideways. It is only after people are done rotating and as situation is unfolding in regards to tariff as time goes on, only then gold may move. If things got worse, like more countries are retaliating by then, we may see gold moving up instead while bond will stay sideways. But if rate is hiked by then, bond yield may continue to go down with new interests in bonds instead. Alright, so with that out of the way, that being clear, I hope you are clear at this point. Let's talk about Singapore next. Why I want to talk about Singapore market here is because I found the way STI moves very interesting. I mean, if you look at the market, right, the index, STI had been very resilient. Only when the 10% tariff is announced, then we see STI moves down, while other markets pretty much had gone down prior to that. So what's up? So here's the thing. Banks in particular, let's talk about bank first, got sold off really fast. I was particularly monitoring the three big banks here, DBS, UOB, OCBC. And if you're one of those investors that bought into the banks in the past days, you would notice how fast your orders were actually filled. This movement is not normal. It's not sold by normies like you and me. I mean, unless you are a whale or a big boy here, it has to come from somewhere. It has the effect of big companies. In other words, the institutions or hedge funds. Only they can make such move. So why are banks being sold off here? Considering the fact that there's a possibility of rate hike due to inflation, which is caused by tariffs, rate hike is good for banks, right? Right? There's a bigger concern here, you see, that is actually happening. Yes, that is good for banks, but it is still uncertain. Jerome Powell actually mentioned how they basically would continue monitoring. So what is going on here? Trading fees are actually part of banks' margins here. If I'm not wrong, as much as 30%. So traders of goods tend to trade in bulk. So borrowing and loans happen. So if tariffs are disrupting trading, this means there may be fewer companies borrowing from banks, hence less earnings, potentially. So investors don't like it when margins are saved. So what? Sell them. That's what I think is happening here, because institutions just want to protect their P&Ls at this point, right? So next, S-REITs. Now, recently I keep seeing how people are asking why S-REITs are going up. People are speculating that it could be because rates will be cut. However, the way I see it is that theory may not play out yet. So here is why. Remember how I mentioned about Powell is actually still monitoring, and with tariffs wrecking the market, there is a possibility that inflation may rise instead. This means there is a chance that Powell would hike the rate. So if this happened, S-REITs should not be rising because it may affect their financing, which is bad. Additionally, this is not confirmed. So here is what may be playing out at this point. If you check carefully, only certain areas are increasing, particularly the retail sector like CapitaLand CICT and Fraser's Centrepoint Trust or FCT. This is because malls are pretty resilient at this point. People do still visit them, especially for Singapore context. It is not COVID, so that means people are still spending in malls. This is viewed as good because there is cash flow here, with dividends steadily coming in, and the rate is actually not bad considering the so-called risk-free rate in SG, Singapore, is about 2.8% to 3% currently. There are still money to be made there. But I think being resilient is what investors are looking at here. Alright, is the footfall, is the resilience. Alright. Speaking of defensive businesses, healthcare is one of them. Considering how healthcare is like a necessity, this explains why those in Singapore market are rising. However, this explains why those in Singapore market are rising, like for example, Parkway and also Raffles Medical. Alright. However, this doesn't really happen in the US. If you look at the US healthcare sector, actually, it dropped by about 2.5% instead. So why is that so? Again, tariff. US healthcare sector imports equipment from overseas. China is one of them. And as much as Trump wants the companies within US to produce themselves, for the healthcare sector, apparently it is not enough to produce domestically. So they still import from outside. Okay, this means margins are affected too. What about Singapore's healthcare then? The US actually doesn't have much exposure to us. And with us having good network, we actually can import from somewhere else. This was also already proven during COVID period where we were able to import from somewhere else to keep our supply stable, right? So this is also probably why PM Wong had mentioned how we need to continue to strengthen our network. But that doesn't mean that Singapore is out of the woods. Turbulence may still happen considering we are now taxed when we export to the US. This may still affect us. All in all though, this explains why SG healthcare sector moves differently from the US. Last but not least, let's talk about the speculation of how the US market may drop even more. Here's the thing. I have heard how a couple of people mentioned that it may drop more, as much as 2 or 3 more rounds. Why? This is because per round drop is probably about 5%, let's say. Okay, and the current PE ratio for S&P 500 is about 22.5, which had dropped from 25. The 20-year average for the PE ratio is about 18 to 20. So this means it is still expensive in a sense. So with another 2 to 3 rounds drop, that's about 10 to 15% drop, right? So with another 10 to 15% drop, the market will have PE ratio of about 90 to 20. This is then within the 18 to 20 range. And also, I had seen someone who made the standard deviation chart for S&P 500. It seems like it had been hitting the SD2, which is the upper level of standard deviation chart, which is higher level of SD1, and it is now that it is just dropping down to SD1 level. So speaking of reverting to means, it still has ways to go because it hasn't really reached that mean level yet. So by combining these two theories, right, it makes sense that there may be possibility that the market may drop more, and hence a couple of people are saying so. With the current rate of dropping, that is actually not impossible. So yeah, with that, let's summarize this. Trump's tariff started it off with the uncertainty of how other countries may react. This is not good for the market. On top of that, the possibility of retaliation may mean imports and exports may be impacted even more. Looking at China here, with Trump's personality of not wanting to lose, this may cause the situation become worse. Investors are spooked by all of that, and with them all wanting the cash flow, they rotate into bonds instead. Hence, the yield is going down. They may not even wait for higher rate here. Gold remains sideways, the dollar rises, the market tanks. Alright, so I'm not making a typical influencers video on what to do now during crash kind of video, because I'm more interested in the explanation behind what's going on at this point, which I think hopefully can help both you and me. I mean, because I also deal with this. But if you want me to do something like personal finance stuff, which I've not been doing so far, and that kind of video, do let me know in the comments below, because I do read them. So yeah, that's all for this video. I hope you like this video, and if you like this video, do consider leaving a like and share it, as it will help this channel out tremendously. Also, if you have anything you want me to talk about, do leave them in the comments below. I do read your comments actually. Yeah, with that, don't forget to drink up, stay hydrated, and I'll see you on the next one. Bye bye.